our channel and the 6th episode of the Forex Market Breakdown. Last week we highlighted some setups and hope you guys not only made some pips but you also learned one or two concepts. This week in the fundamental space we don't have much. We only have non-farm payrolls on Friday, and we also have two policy meetings by the Bank of England and the Bank of Japan. On our website you can also check out some of the data that will be released. There is an article on Trading World section called the Economic Calendar, and you can familiarize yourself with what will be released this week so that you can be able to plan ahead of the week what you should do in every likely scenario that is likely to play out. That's all in the fundamental space, and we'll go down to the chart breakdown. So yeah guys, we're down to the charts, and this week we'll start off with USD CAD. Last week we highlighted some playouts, and gladly all the playouts played out as we expected. And we're down to the charts now. This is the weekly chart USD CAD. Last week's closed quite a hammer, signifying some bullish momentum still coming in. We tried going lower, but we quickly rejected the moving averages, and we are trying to go higher again. So what do I see ahead of this USD CAD? We're at a crucial level, a crucial supply zone, because don't forget we also have this lower highs and lower lows formation. So this recent higher low was also a lower high at some point in time. It was also a lower low, and you can see right now we're at the 78.6 Fibonacci, and you could perhaps see some momentum coming down, especially after the Canadian dollar. Canada raised its interest rates last week, and we have not yet seen the full reflection of what could be happening with the Canadian dollar. And so let's wait and see, because the markets are at a crucial level. So if I go down to the daily charts, these are my daily charts. You can see that we have this triangle, and we are almost touching the trend line for the third time now. This is the third touch of the trend line. In fact, we have done that. Last week we highlighted this probable comeback to this level before going higher, and you can see after the interest rates were released, we had this quick fall before going back higher, and now we have touched this mark, the 1.31 level, and we have touched the trend line. Still some bullish momentum coming in, and yep, I think we'll be going higher to touch the 1.32. I think we'll get a break of this, a break of the 1.32, and probably even go higher. But before that, if we go down to the 4-hour time frame, I had this setup that I executed some times back, but I'm already out, so I'll just get it off fast for now so that I can show you what I'm thinking might happen on this pair. So we have this trend line, we have 3 touches of the trend line, but we have not completed this Fibonacci to this mark, the 27.2. So what is the likely possibility to happen? If we bring our Fibonacci now, we get this one off, and don't forget the 1.32 level. The ultimate mark we are looking for is this zone. I'll probably even highlight it for you so that probably before the end of this week we'll be touching these levels. But before that, perhaps we could see such a move happen. We could get this move. You can see there is this small Fibonacci over there. So you could get the 78.6, a sinking, a tanking to the 1.305 level, retesting of this mark, and also a 4th trend line bounce, which is also a zone between this 3050, before finally going higher to touch the 1.32. This move to the 1.305 mark will also be a pullback of this initial move, and if we use our Fibonacci again, try to get that mark, we get that will be capped by the 61.8. So yeah, a lot of confluences are lining at this level, 13050, and I'm waiting for the markets to go lower to this level before deciding what I'll be doing on this pair. So if we get to this level and it gives me a good buy signal, then I'll be bulking up my position to this point at the 1.305 mark. So I'm looking for that mark. Also, a short play can be executed to this mark, 60 pips away, not a bad day trade, but that depends on how you trade and how you do your analysis. So yeah, London Open is almost close, and we can expect the markets to head lower before the US session, before tomorrow, and tomorrow we could start seeing a move going higher to the 1.32 mark before the end of this week, and before non-farm payrolls come out, or we could get that move to this mark after the non-farm payrolls have released their data. So yeah, that's USD CAD. I'll maybe go down to the next pair. So the next pair I'll do is oil. I'll do the commodity oil first because oil is highly correlated to the Canadian dollar. Canadian dollar is actually a commodity currency. So this is oil. You can maybe start off from the daily chart. So yeah, probably last week I highlighted that you expected this move all the way from the 68.5 mark, the 70 mark, to the 67 mark. Look at what happened. We had a tanking within a single day, and the price action was capped by the 67 mark, and currently we can see a bottom sign happening at this mark. We had this inverted hammer and three candles trying to push higher, retested by the moving averages. Yesterday we saw some bearish momentum come back into the markets, and again today, early morning Tokyo session, because London is not yet open while I'm doing this, and you can see already there's some bullish momentum coming into the markets. So what do I see of oil? If I go down to the 4-hour time frame, I think I'll be able to show you clearly what I expect. So I had this channel, and this channel you can see we had this consolidation, a touch of the channel, we went lower again, we had this consolidation, and now a break of this channel, and you can see that we have a retest. So if I zoom in already, you guys can see that you have a retest of this trend line. I also have this sloping upward trend line, and you can see the first touch, second touch, third touch, fourth touch. So oil, I'm expecting a break of this ranging market and a break of this inside bar candle to this 68.5 mark. So probably 130 ticks to the upside to the 68.5 mark. I'm looking for that level before deciding whether to go lower or higher. But the 67 mark is also a crucial zone. So for oil, I'm expecting a move at least to this level, 68.5, before deciding what I'm doing next. So probably 130 pips before we get to that level. I'll also be updating what I expect to happen on this commodity once we get to the 68.5 on the site. So you can keep checking on the site. I think on Wednesday I'll do an article, and probably before Friday's close I'll also do an article. But oil, for now, higher low, higher low, higher low, higher low. You can see also higher high, higher high, higher high. So probably a higher high at the 68.5 mark, and a break of this inside bar candle going higher to this level. So yeah, that's oil for me. Next we'll go down to the EJ Euro Yen, and this way we can start off maybe from the weekly chart. So Euro Yen is generally not really trending. I'd say we are in a consolidation band based on this weekly chart. You can see we're bouncing off the 132 mark and the 125.5. We've been doing that for almost 4 times now. The first time, second time, third time, fourth time, and now we're going lower. So we were capped by the 127.3, and you can see some bullish momentum coming back into the markets already early this week. And if I go down to the lower time frames, the 1 day time frame, this is the 1 day mark, the 1 day time frame. The beautiful patterns over here, quite some momentum. Volatility is high on this pair, so if you're trading it, you should be cautious on that. So we have had this straight leg from the 129.5 to 127.3 without any pullback, and I honestly expect a pullback to be coming into the markets now. And if I use my Fibonacci tool, I get that you could be capped by the 128.5, which will also be a retest of this moving average. Or if we break past the 128.5, I'll be looking for 129.5, the 78.6 mark, before heading lower to touch 125.5. So be cautious on 128.5 and ultimately 129.5 on the daily chart. On the 4-hour time frame, this is the 4-hour time frame, Euro Yen. So small pullbacks as you are going down, and I'll show you the small pullbacks that will be used as adding points as you are going down, and also as execution points if you are not in the trade. So you can maybe get, this was the first move, had a small pullback to 50%, we went low again, touched the 27.2, had another pullback from this level to this level again, touched the 50%, and again we touched the 27.2 before finally going higher, and now we have nullified this higher low. So if I use my Fibonacci again, try to get, if we have nullified the higher low, we get that you have already broken past the 78.6 mark, and using the top down approach you can see that you are going to get a pullback anytime. So yeah, we're expecting a pullback of this downfall from the 129.5 to the 127.3 mark, and 128.5 first target on 29.5. So if we get to on 28.5, we get a good bearish signal. Then I'll be executing short trades. If we don't get a bearish signal and instead we get a break past 28.5, I'll be looking for bullish plays all the way to 129.5. However, be cautious of this level, the 129 level, and we could also get a return move from the 129 level before getting to 129.5. So that's my bias on Euro Yen, and I can maybe go down again to Euro USD before finally closing our day. I'll just do Euro USD. So this is the Euro USD weekly chart. Last week we highlighted a possible break of 1450. Finally we had that break, and we can see bearish momentum coming into the markets, pushing it lower. Honestly, I don't expect some bullish momentum coming anytime soon on this pair, and I expect some bearish momentum to be going lower to 1260 and ultimately 1.1395. So long term I'm looking for 1.1395, but before that I'm looking for 1.1260. If we go down to the daily chart, so yeah, this is the daily chart on the euro, lower highs and lower lows. Finally we have broken past the 1450 after consolidating over here for quite some time, being unable to break past that level. We finally had a break last week, some consolidation. So what do I expect on the euro? We could probably get a pullback to the 1450 mark, which will also be a retest of that level before heading lower to the 1260 mark. So if I use my Fibonacci again, a probable move to 1450 before heading lower to 1260. If we are unable to close below a ranging market that I'll show you on the lower time frames, then I expect that the euro will just collapse straight down to 1260, and I wouldn't be selling the euro at that point because it's not really a good level. If we get a move to 1450, then I'll be selling the euro, expecting the move to come back to 1260, which is a 200 pip move and a worthy move of risking my cash. So if I go down to the 4-hour time frame, this is the 4-hour time frame on the euro. Again, small pullbacks just like euro yen. The euro dollar and euro yen like sitting at the same levels and doing almost the same thing due to the correlation between the dollar and the yen, but I'll not expound so much into that. You have to do your own research or do your own course so that you understand these things. Okay, so for the euro, I don't have actually one level. Let me just bring it back first. So I'll clone this one, then I'll bring it down, and we'll change it to 1.13330. I've not really gone into detail in this video because we are busy and I'm trying to do something else in a short time. I'm supposed to be somewhere else, so I'm doing this video really fast. So yeah, this is 1.330. You can see lower highs and lower lows formation. Honestly, going down to the lower time frames, I don't expect the euro to go higher to 1450 unless we get a close above this Fibonacci, because you can see we have been capped by the 78.6 mark, and you can see no significant bullish momentum coming into the markets to push it higher. So if we can be able to get some bearish momentum coming in, then we can expect the move to come back lower, take out 1330, take out 1300, and finally rest at the 1260. So I'm looking for 1.1260 before the end of this week. Otherwise we could get a move. If we are unable to close below this Fibonacci pullback, then I'll be expecting a return move to 1450, which will also be a retest and a pullback of the move that I showed you on the daily chart, and I'd also be executing short trades. But be cautious of this upward trend line. Without a break of this upward trend line, then there's no move to touch the 1450. A break of this upward trend line will signify a move to touch 1450 before heading lower. Before that, stick with this lower Fibonacci, the downtrend, because always remember that the trend is your friend till it bends, and I don't see where euro is going to bend anytime soon and turn into bullish momentum. So yeah, euro bearish momentum coming into the markets. I'm more bearish than I'm bullish, and I'm expecting a break of 1330 and a lower move to 1260 probably before the end of this week. So I'll only go through those 4 pairs that have those 2 pairs and I've done 3 pairs and 1 commodity. So hope you guys have learned 1 or 2 things. Hope you guys have understood where the markets are going, and hope you guys will position yourselves accordingly. So I'll pass it on to Caleb to do the other pairs.
Hey guys, welcome to the video analysis of Aussie dollar, and we'll also take a look at EA. Today we won't really get deep into analysis. because we're basically waiting for the interest rates on the ECB region, and also we're waiting for NFP on Friday later on in the week. So basically, just to recap what we did last week. Last week, I remember when I talked about the market coming and finding support again at 0.7050, and my analysis was that we might have another rally back up to this point, if you remember well, but we didn't really get to that point. We got beautifully to our Fibonacci retracement level at 50, which we saw the market come back down, a bit of pullback, but it came and got our targets right here at 27.2 Fibonacci extension level. And if I get rid of this, basically now we can see the market came back up or back into a consolidation area, which now the market seems to have found a new resistance level at 0.7100 around this region, and we retested this level not once, not twice, not thrice, but now we're testing it the fourth time. So basically we are finding this new range market. The market is at the moment not too hot, not too cold, we're just there. The market doesn't seem to have really much direction. We're waiting for NFP later on in the week in order to get a sense of direction after that, but most probably likelihood, as we've been eyeing for some time now, we're still looking for more the targets at around 700 to be hit before we get that bull run, or anything else might not happen right now. After this bounce, we might also still come back up here. It's still a probable outcome, and then anything can happen in the market. Also, another bull market can come where we go up to that level where we can retest our trend line, which is also a really high probabilistic outcome that can happen. And that's one analogy where we can retest this level, our trend line, in line with our resistance level 0.7200, and after that we can have that fall back down to 0.700 before we get that sense of direction. So at the moment the market is still bouncing off. It's not really best. Sometimes it's difficult to know the sense of direction, especially when we enter the consolidation level, but the whole year round we've been watching Aussie dollar, and we've seen it always getting into these ranging markets from time to time, and it's always breaking to the downside. So we might have this time maybe a different outcome might occur, because many people are waiting for that break to the downside. Something different might happen. The markets always happen going against the consensus. We might spike back up, get that touch before we get a further drop to the downside, finishing our third quarter this year before we start the new year. So that's basically what I have on Aussie dollar, just a random, not a random, but rather an overall outlook. And maybe you can go down to the EA and see what's happening down there. So basically this is EA, and basically we had, or rather I had a different analogy when it came to EA. I was really eyeing the market to come back to 1.6350, which the market didn't really come back to that level. We rather instead saw another drop after we came back and retested this level, which is not a really strong, but let's say a temporary resistance level at 1.6250, and immediately the market after that we came back down, tumbled. We came back, we dropped below our monthly support at 1.6150, came back down, came and retested it twice. We came back down, and the market seems to be gaining momentum to the downside, and we're still dropping further. As you can see, we're dropping below another minor support level, but we're going to target our previous higher low level, which is just around 1.600 level. And if we go up to a daily time frame, this is our 4-hour time frame. As you can see, market is really gaining really gaining momentum, and our target might have changed, and for now we might be targeting around this region, which is in line with our trend line. We can have another third bounce as long as we remain below this trend line. As you can see, this our CTL, our counter trend line, as long as we remain below it, as long as we remain below our MAs, our target might be down here. and this is also in line with breaking our previous higher low, but in the long term it will be still a new higher low if you take this level and if you take this level before we get any sense of direction. So this bearish momentum is really strong. As you can see, today's candle is about to close as a bullish, bearish engulfing candle, and yesterday Monday open, you could see this was a really strong bullish momentum where we got entry levels, good entry levels in order to short this market. And the market may come back down where we can hit this level before we get that sense of direction, which can be up, or we can also further break this, but there's no likelihood of that. But anything can happen in the markets. Always remember that. And I'm not here to sell you signals or anything. I'm here just to analyze and give you a broad view of how we analyze the market. And we're always changing opinions. So don't always, if you're a trader and trading our markets, it's not really advisable always to take our trades, because traders change their mind on a daily. It's something that happens from time to time. I can be bullish in the morning, in the evening I'm bearish, and it's not because of inconsistency or not understanding where the market is going. It's just that we're able to change our opinions when the facts change. The market is always pitching to us information. It's always telling us what's happening. It's up to you to accept that fact and change your bias or your idea on where you had the market going. So that's what we can be having. We can also be having this short it can be a short just spike just below our support region again, because as you can see, we've been within the ranging market as we saw last week, which I won't get deep into that. On our weekly time frame, within a consolidation level within and inside bar. So we might also have this sort of a spike false breakout where we can see the market again just rally back up to this. So we're not really entering the market. It's not clear. I always wait for the market to come to me. I don't force anything to happen. So if you get that good analysis, good approach, if the market comes back down here, I'm good to look for buy levels. But for at the moment, right now, I'm not really. We're still watching to see what the market is telling us, what it's pitching to us. I'm trying to understand what it's saying. So basically that's it. Not being emotional about any trade. Might make losses here and there, but always come back and make money back again. It's always that. There's always ups and downs. You have to breathe in and breathe out. By that I mean you have to make wins, make losses. So that's basically it. On the EA, you can do your own analysis and see how that plays out, but basically that's what we're looking at. We can have that break to the downside, come and retest our trend line, or we can stay within the inside bar and for some time and see what the market is telling us. So that's basically it. I hope you have a lovely week. I hope you catch some peeps here, and above that, make some money. So have a lovely week, enjoy the weekend, and may the peeps be with you.